Hello and welcome to Mongo Spaces this Thursday evening. Today we have a special kind of spaces where we want to discuss a bit on how to become an analyst, kind of 101. I like the story of David. He's from Kenya, went to Wall Street and has come back. He has a unique story. We would like him to share a little bit about his journey. So David, I would say I have really learned a lot from you the past couple of months or so, especially modeling and how you've done it, especially banks and stuff like that. You can tell us a bit about yourself, maybe a teaser, and then I'll pick up from there a few bits and pieces on where I can double click on.
Awesome. Thank you. Thank you very much, Eric. And thank you very much for hosting me. It's a pleasure to be on your podcast. I'll dive right in. Born and raised in Kenya. I did philosophy in undergrad at UON and then did work in development work and humanitarian aid for a bit. And after that, I switched a bit to the diplomatic side of things. So it was a bit of development aid, humanitarian aid, and diplomatic work, and then switched after B school to capital markets. I've always loved investing when I was in the country. I usually did that as a retail investor. So I followed the market very keenly. And I think that comes from my mom. My mom was a very keen investor, retail investor. Some of the earliest memories I have of my interest in investing is my mom would prepare me in the morning, maybe on a weekend, and we'd go to the bank and we'd sit in the lobby. As she's waiting to see the bank manager, I knew she had shares in a bank, and I think to myself, wow, she owns a piece of this bank. And that was my earliest fascination with investing, that you own a piece of the bank somehow. And I spent a lot of time, like back in the day, they used to send annual reports via mail, and I'd spend my free time perusing those documents. None of it made sense to me at the time. I loved how glossy it was and seeing the pictures and the profiles. But I think that was also my first introduction to accounting as well. So accounting, investing, and also spending a ton of time in the local library back home, just going through magazines like The Economist magazine. And that sort of exposure, I think, slowly built an interest in me, in capital markets, in investing, in the financial services part of investing. So I think in brief, it started quite a while ago and somehow led me to investing professionally and working on Wall Street.
How did you get to Wall Street? Because that's everybody's dream, or more often than not, the pinnacle of finance. So how did you get there?
The way I approached it was I want to be a really good investor, and I want to know how really good investors think. What's their process? How do they approach looking at a business? How do they unpack the sources of value of a business? So I think that's where I started my process, like trying to envision myself as a really good investor. And inevitably, when you go through that process of thinking through how that process works, you end up wanting to work on Wall Street, especially if you're just starting out in your career in the financial services sector. So I worked for a bit in humanitarian aid and development, but I knew I wanted to do a switch. And in my research, I realized doing an MBA kind of gives you a huge opportunity to like pivot careers. Being in business school allowed me to do that pivot to Wall Street. So I'd say it wasn't like applying to roles while in Kenya on Wall Street. It was more of going to business school first and then using that platform to pivot into Wall Street. When you're in business school, it becomes really easy to pivot into some of these careers, say management consulting or investment banking, and even tech, like high tech. So that was basically how I approached it. It's tough breaking in straight out of the gate if you're not like a US national. It's a bit of a process. So I decided maybe the best way to do it is first go into business school and then use that as an opportunity to network and recruit for Wall Street. I think business school was valuable for me because I was coming from quote unquote an untraditional background. You find that most folks who end up in business school are guys who have already worked in investment banking or in management consulting. So like for them, business school is kind of like a finishing school. Whereas for me, even though I had an accounting background, I wasn't coming from that sort of background in terms of work experience. I was coming from international development, which is very different. And in those circles, they'd consider me or someone with that background as someone coming from an untraditional background. So I had to figure out, how do I leverage this background and how do I use it to get into business school and how do I pivot? And if you have passion for something, it shows, right? So it was very easy for me to sell my passion for working on Wall Street because I knew our local markets fairly well as a retail investor. I could speak fluently about my investment process. Maybe it wasn't the best at the time, but it's clear. Like when you speak to someone who's passionate about capital markets, it's very clear from the get-go that they love what they do, they know what they're doing, and that really helps when you're recruiting. So I guess that's more or less how I did it.
There are a couple of things that you've talked about I would want to explore, but I think first is getting to business school from Kenya. It's not very easy. You do need things like GMAT to get them in order. So from your experience then, what are some of the tips that you've learned in the process in terms of getting to Wall Street and what they want, and then how you can maybe fashion your experience in Kenya to appeal to an audience that is more US focused so that you can be able to get into those business schools? What are some of the things that you need to get in?
There's a whole concentrating industry around trying to get people to business school. And it's a huge topic. I don't think we can cover everything in one sitting. But the one thing that at the very top, you want to demonstrate that you've taken advantage of every opportunity available to you. Maybe you've not worked on Wall Street. Have you worked as a research analyst or some investment bank, a local one here? Have you achieved notable milestones given the resources and opportunities available to you? And I think that's how you should approach it. And working backwards, I have to think, like, in my role, what am I doing to stand out? What am I doing to have more responsibilities? What am I doing to show that I'm progressing in my career? Even though it does seem as though they recruit from certain sectors, from certain feeder organizations, you could really easily stand out if you show that, yes, you had this opportunity and took advantage of it, and you've done something amazing with whatever you had before you. Other than that, I think there are a ton of free resources. If anyone is thinking about going to business school, there are a ton of free resources online, sample essays. There's a whole website that talks about looking at business schools and how you should think about getting into business school, how to prepare for GMAT. And I really leveraged all these resources, maybe 2-3 years, just slowly thinking about, do I really want to go to business school? It's expensive as well. You want to think, how do I get something out of it? And how does it look like in terms of career outcomes? And once you've made that decision, I think everything else is easy in terms of figuring out how to get in, given the amount of resources out there. But yeah, what opportunities do you have available to you right now? How are you taking advantage of them? Are you demonstrating that, yes, you're increasingly taking on more responsibilities? That's a big one. And also, like, selling yourself. I think if you're trying to get into an American business school, they love stories. They love to hear you sell them a vision. Yes, I've done A, B, C, but I want to do X, Y, Z. And the missing piece is this DEF, which is the business school. So you have to show that the particular business school you're applying to is part of your career path or your career journey. And you want to take advantage of the resources that they have to get to that XYZ. But that's more or less the process that I used, at least.
Something that you say that resonates with me is the process bit. If you want to get into business school in 3 years' time, you need to start thinking about it now. So it's a bit of 1 or 2 years. You get the data, collect the right kind of things that fit into your story, process your story well from where you are and where you want to be, and showing that the business school is actually the key component that is missing to help you get there. And learning also to sell yourself. Now, did I get those things right? And especially that bit of investing a lot of time to the process itself. So like the GMAT, getting your grades properly in order, and also just basically making sure that everything is in order. Your references are high quality. So I think those are some of the things I myself have seen in the process that sometimes people don't take into consideration, especially when applying for business school abroad. Did I get that right?
100%, 100%. I've advised guys who, before talking to them, didn't really quite understand the process. But when you look at their CV, when you look at their resume and look at their career achievements, these are people who should be applying to like top 3 business schools. But the way they're approaching the process, the way they are approaching the application is not ideally how you would go about it. And it's exactly what you've said in terms of how you're approaching it and the process. And those guys end up in those top 3, top 5 business schools because you have the material. It's just a matter of how you're packaging it. And a lot of people, I think, underestimate just how much time you need to prepare. Business schools are not like typical graduate schools. Because of that element of the career outcomes, a lot of people apply to do that pivot like I did, whether that's geography, whether that's career, or even if it's like a horizontal switch. So for sure, you definitely want to spend a lot of time thinking about your process and coming up with a plan.
I teach us accounting. One of the things that just strikes me from your conversation is about just knowledge in terms of the local markets and how I think we underestimate how much knowledge you should gain just reading the papers every day, business news, how much you can gather in the process, which can also help you in the application process. Could you speak about that, the value of that as you go to business school also?
Yeah, for sure. I think if you're going to a global program, you end up in class with folks from India, folks from Peru. It's a very multinational class. And demonstrating that you're aware of what's happening beyond your country's borders really does help. It also plays into that element of selling yourself and selling that vision of hey, I'm here in this local market doing XYZ, but I want to play at a global stage, maybe. And speaking fluently to trends that you've observed and tying them together with things that are happening locally in your market really does help for sure. So being globally aware at least wouldn't hurt your prospects for sure.
You get into business school. Now, what are some of the things that you observed there? And where did you go for business school? And so what are some of the things that you observed in the 2 years? I don't know if yours was 1 or 2 years at business school that were invaluable in terms of reflecting on that piece of the journey.
I think for me, that was really my first time living outside of Kenya, and it was a 2-year residential program. And you're in class with like super smart folks, guys who've been in Wall Street for forever out of undergrad, folks who've been in management consulting. So these are guys who have been playing at a very high level of performance for a fairly long time. So for me, it was a huge learning experience and exposure. And I think the idea for these programs is you have your professors, yes, but a lot of the learning is also happening amongst peers. So I'm talking about our local capital markets, what's happening there. And I'm learning from folks who have worked in their capital markets or on Wall Street, and you're learning a lot from them as well. And that helps not only in your investment process, how you're thinking about investments. The more immediate benefit is how to position yourself for the opportunities that you're recruiting for. And you're getting all these tips. Of course, there's a career office that's also super helpful as well in terms of guidance. And I think maybe the most difficult thing is getting in, because how Wall Street works, and maybe I'll get into that a bit, is they have like feeder schools or target schools. And your role is to figure out what are these target schools and how do I get in? And once you do, it becomes very easy to start networking. Yes, getting in is the easy part. You also have to do the legwork of networking, really brushing up your resume, talking to a bunch of folks. And the assumption is that you're super smart just to get there. And you have to show that you're super smart. You're speaking very fluently, the topics that people think you know. In my case, for instance, if I'm from Kenya, I'm from Africa, so people like my peers thought I knew a lot about the continent and the continent's capital markets. And you have to show it in a way because they're also depending on you to learn about that region and that part of the world. So you really have to make sure I wouldn't say you're an ambassador as such. You're presenting a good narrative, and good here is like good, quote unquote. And in the process, you're coming across as someone who structured things well and that sort of thing. I'd say it's 50-50, actually. You're learning like 50% is from faculty, and the rest is really from your peers.
And I think when you get into business school, at least for me also, is that you learn that it's best to have a strategy in terms of where at the end of the 2 years you want to be at. Because after the first semester or second semester, you need to choose a course direction, consultancy, investment banking. In that regard, how did you fashion yourself or at least position yourself towards the exit? Because it means learning the exit point. And then if you come to business school, you often realize a lot of people already know what they want. So it can seem to a crisis that you're coming in. You quickly need to choose which direction you should take. How do you position yourself for that a bit unsettling experience in business school?
I think getting in, you already have to show that you know exactly what you want. So you have your short-term career goals and you have your long-term career goals. That's really part of your application, and it factors into whether or not you're considered as a candidate, because I think for them, it's also important to really connect you to the sort of opportunities that they usually have access to. So if you're going to a school that's known to be a finance school and you're really keen on getting into consulting, it's not going to disadvantage you in any way. But someone who wants to get into finance right out of the gate seems more appealing because a lot of banks are recruiting at that school. And you're saying, hey, I want to get into business school because I want to do Wall Street for 2, 3, I don't know how many other years and do something else, like pivot. So you're immediately more appealing than someone who might not want to get into the space that they're really good at placing candidates or MBA students. So that's one. Like even when you're applying, you already know where you want to end up in the short term and in the long term. And I think that really helped for me because that was a point for me. Like from the get-go, I wanted to be in capital markets in a certain role. I wanted to be really good as an investor in terms of my process. So it was very easy to sell that. And I had proof points. I had proof points. I had a bit of data. I had done the legwork, getting to the admission committees and telling them, hey, this is what I've done. This is what I'm doing, and this is where I want to get to. For me, that was a fairly easy thing to do because I had wanted to work in capital markets for forever. And I had been going through some of these websites, some of these chat rooms for quite a bit. So you know the lingo, you know the process, you know what to say. And in the end, you really have a passion for capital markets. So that shines through. So definitely, if you're thinking about going to business school, you have to have a very clear career goal in mind, tangible in the short term and obviously in the long run.
Well, my observation is also then you need to spend the time before you get into business school to reflect a bit more on what you want to do, because it really helps when you come in very clear. It's not a bad thing to come in an unclear way, but I think like it helps when you know at least what you want to get from business school, because business school serves different purpose for different people. And one of the other things I also reflect upon is the role played by networking, that immediately you come in, don't be shy, push hard, work hard, and come in and show your value, and at the same time learn from others. How did that work out for you in that regard, in terms of network?
I think that was the challenging bit because I'm coming from a very different culture, and Americans generally put themselves out there. It's very easy for them. I think that's like kind of part of the education system. They know how to communicate, like presenting, talking to people, networking, cold calling. Those are like really important things in your networking process once you get in. So it was challenging for someone who comes from a culture where you don't put yourself out there as much. Even when there's value that you think you can add to someone or to a process or to a company or to whatever, but we're not very good at marketing ourselves, and Americans are. So that was an uphill task, but have to do it. It's a very short window. Immediately you get admission, you have a career coach, you have a recruitment plan. And part of that plan is obviously reaching out to alums, cold calling folks that you think might be interesting. And for me, that was challenging. When you're in there, you just have to get it done. Challenging, but it was also like a learning opportunity. You really learn, because that's how it works. It's not applying and hoping your application is going to be shortlisted, go through the process. It's really about how do you stand out? How do you make an impression? And quite a bit of the process also involves word of mouth. And that's why networking is very important, because eventually the people who are recruiting, especially for investment banking, I didn't recruit for investment banking, is that these folks sit around and say, hey, someone reached out to me. What was the impression? And remember, when you get into many of these banks, you're working in very small teams, whether that's M&A, whether that's like a sector group or whatever. It's really the team that you would be working with that shares the feedback. Hey, he reached out to me. This was my impression. We had a chat. Blah, blah, blah. You just have to do it because it's part of the process. And if you're not in the process, it's very hard to do. But if you're in there and you have to do it and your career depends on it, you do it and you manage it. And I think it's very beneficial later on, especially when you want to do like a pivot. You've done like your internship, you've done like a year or two, and you want to pivot. Really, that's how Wall Street works. It's just cold calling someone, reaching out to someone, talking about yourself, talking about what you're doing and selling yourself. That's how really a lot of recruiting works on Wall Street. So it's a very fundamental part of thinking about your career.
Do you explain to someone who was listening perhaps what cold calling is in essence?
So calling is, I think it's like cold emailing these days. Back in the days was you get someone's number, you just call them. They don't know you. Maybe you know where they work, you know what they do. You just pick up a phone and call random people. Maybe not random. You have someone that you think could be useful or you want to learn from them. So you just pick up a phone and call them. So cold emailing is the same. You see someone interesting on LinkedIn. You think they work for a very interesting company. You'd like to work for that company, or you think you'd really love to learn from them. You just DM them. So that's basically what cold calling or cold emailing is.
It works wonders from what I've seen, in the sense of I can network you upwards. One of the side gigs I do, I actually just cold email someone and then they replied, and then the rest is history. So I think it's very important not to be afraid and just be clear on what you want. I think most people are really welcome. And I would say generally, most of the people who actually end up working with us at Mwango Capital most often are cold emails that come to us. Most of the people, they push your DM, you text, you call, you email, and you don't give up. And then I wanted to tackle something else that I've also personally struggled with. I think they call it the imposter syndrome. How do you deal with that in business school and maybe just going into Wall Street?
That's a huge topic as well. The good thing is you realize almost everyone has some level of imposter syndrome going into business school. It's where you feel inadequate, you don't deserve to be there, or you've not achieved nearly as much as your peers. Sometimes you find you'll be in a class and discover this guy competed in the Olympics, he has a gold medal or whatever. This other guy invented something. This other one had a startup, exited successfully. And you're there and you're taking stock of this folks did X, Y, Z. What have I done? And it's very easy when you're taking stock of things to feel that you really don't deserve to be there. I don't know what advice I'd give there. I think the way I coped with it was reflecting on my journey and reflecting on the things that I've done and also reflecting on the things that I want to do. Thinking about my journey and also thinking about it in the inverse, that maybe I don't have a gold medal or I don't have a silver medal, whatever, but I'm in class with this guy. So that means I've done something. The ADCO must have seen something valuable in me to put me in class with this very highly accomplished folks. And also feeling confident that, yes, you're in class with highly accomplished people. So that means you must be there for a reason. So that's how I don't want to say I tricked myself into coping with imposter syndrome. But I noticed, like, from the get go, it's something fairly endemic in those circles. And you also see it on Wall Street as well. Just this thing of putting very highly accomplished people in the same room, end up with that sense of, hey, maybe I don't deserve to be here. So I think you really need to know yourself, know what you've done, know your value, and also know that you're on your own journey. At the end of the day, it's really about what you've done and what you want to do, and no one can take that from you. So I think I felt very comfortable in my journey and knowing that it's my journey. And that really helped me to tap into the expertise as well. Once you overcome it, it becomes much easier to really speak to what you know and also take a learning position. I think part of imposter syndrome is feeling that you should be the one who's very highly accomplished. You should be the one who is teaching everyone. But the truth is, you're also there to learn. So taking that perspective helped for me.
It's a tough one to deal with. I think basically at the end of the day, you just need to realize, hey, you have something to offer the world since you're alive. And I think just pick it up from there and just keep going. There's a day I posted a question on this and I realized even people I highly respect deal with that. So imposter syndrome will never really end. There's always someone who's better than you and someone who's always worse than you. So just keep going. Now you're in B school. Did you want to share where you went to business school?
The business school, I went to Tuck School of Dartmouth College.
Isn't that related with Farmer French a lot, if I remember correctly?
Yeah. It's associated with Farmer French. Like one of the professors, Ken French, teaches there. That was amazing, sitting in his class.
Okay. Does he still consider markets inefficient?
That's kind of like a hot button topic, but the markets have evolved. And right now, when you look at markets, the efficient market hypothesis is not really supported by data. So you have factors, yes. You have old investment companies. I'm thinking of Dimension Investors, and the guy came to speak to us, who've made successful businesses out of that. But you also have to realize it's not nearly as perfect. It's not nearly as efficient. So I think it's an evolving topic, I feel.
Definitely. I remember at B school, some of the data you had to source it from TAC Business School. So I think the website, that's where I came to learn a bit of it. What's about TAC Business School? Because maybe one thing that someone applying for business school, most people don't know is that every business school kind of has an orientation towards a specific area. There's some which are more consulting oriented. Some have a leaning towards investment banking. So I think there are some things that as you maybe check out a business school, you need to look at what you want to accomplish versus what the business school offers, because different schools are also at different places. Also something like school fees is different, access to scholarships and all. You've been to the US, so perhaps you can share a bit more experience on that.
TAC is really the fast graduate school of business, and it's known as a consulting school. That's number two. But I think it also places very well with certain investment banks. You have a ton of alums in certain investment banks, so that kind of helps. The other thing is the alum network. It's really the strongest. And I think I was really keen on that as well. Being able to tap into a strong alumni network. Remember, cold calling, networking is a very important part of your career journey in business school and post-business school. So it really does help to be part of a network that supports current students and also professionally in terms of career pivots, career changes. And I wanted to be part of that. And TAC is really the best when it comes to very close-knit alum network. I think the other thing is coming from a background where I wanted to make an impact. I was coming from international development. And one of the reasons why I went to international development in the first place is I wanted to do something meaningful. And I felt that there's a gap that needs to be filled, and humanitarian aid and international development does a good job. There's a lot of debate around it, but certainly for humanitarian aid, they're doing something meaningful. They're plugging a gap somewhere. And that's one of the reasons why I wanted to be part of that space. Later on in my career, I realized they do it and they do it nicely, but there are all these externalities. And sometimes they end up doing more harm than good in terms of the incentive structures that end up being prevalent in a certain market. So I felt that maybe that model doesn't work very well. So I wanted to be an investor, but at the same time, I wanted to explore another channel of improving lives. And business for me seemed like an obvious one. And the thing about TAC and what stood out for me immediately was TAC's mission. One of the mission is TAC develops wise, decisive leaders who better the world through business. So that immediately resonated with me. I wanted to be part of a network or a school that has that as its mission, bettering the world through business. And that in faculty, that in some of the courses that they do, you have a strategy in margin. Okay, a lot of business schools do the same thing in terms of coursework, in terms of syllabus, but TAC kind of stands out because of that mission. So for those reasons, TAC for me stood out. I applied to a bunch of schools like almost everyone does. But when I got that mission to TAC, I was like, yeah, this is what I'm taking. And then the other thing is its location. It's in a rural place, and I grew up in a very rural place as well.
Is it cheaper because it's rural?
Ironically, no, it's an expensive place relative to other towns in the vicinity because people know like this Dartmouth College over there. So definitely the quality of life is quite high. And that also comes with the price. But I love the setting. I really love the setting because I grew up in the plains of Laikipia. I spent my childhood spending days in like plains that are endless, and you have that. Only now it's in New England in a different environment. So that was also part of the attraction for me.
Other business schools around you, maybe you can mention a bit and what they're known for someone who's perhaps looking to the US. Just a quick mention off the top of your head. Doesn't need to be elaborate.
Off the top of my head, I guess the top four, Stanford is known for, I guess, finance and VC, the VC PE space, HBS. I guess it's all over, but mainly PE consulting, Wharton, finance, obviously Columbia, finance, NYU, finance. There are a few that come to mind.
Almost definitely always, I think it's good to have a little bit of knowledge in terms of the background, the business school where you are from and how it ties into where you're coming from. I would say from the European perspective, check out also scholarships in terms of these big universities. Maybe that's something you could also emphasize. I know INSEAD has specific scholarship for African students that you can lean into if you're going for masters abroad, MBA abroad. And maybe, David, do you know any others that people should check out?
I really liked, I'm forgetting the name, one in France, a really good school in France.
Is it HSC Paris?
HSC Paris is really good as well. There are a bunch of like really good schools in Europe. The thing is, they are 1-year programs. Like most of them are 1-year programs. I think even HEC Paris, there's ESCP as well. I guess the oldest business school in the world.
The London business schools around Europe, the US, they have scholarships definitely focused on Africa. So in terms of mix in funding your business school, how do you get along? How did you navigate that bit? Because it's very expensive. I remember applying to one in the US and bill came in at around 3.5 million Kenya shillings. And that's after 50% scholarship for a 1-year master's in finance program. And that's pretty steep.
That's super steep, yeah. But the ticket price, that could scare you. Many of these programs are like 150K and more. It's actually trending higher. So on average, really for the top 10, it's probably like 170, 200 onwards. So that's the ticket price. Usually you get very generous scholarships and then you plug the rest with student loans. And student loans are fairly easy to get once you have an admission to business school. Many of them have partnerships with these banks. And the thing is, you're more or less assured of getting into a role that allows you to pay off the loan. So it does seem prohibitive, but like when you get into the details of it, it doesn't seem so expensive after all. And I think I was also lucky to get a fellowship. Once you do the internship, most banks have this fellowship thing where you can apply for, you're shortlisted. And I was lucky to get part funding through that fellowship. It's expensive, but then when you look at the details, it doesn't seem as though it's something that is inaccessible. They have generous scholarships, not only school funded scholarships, but also scholarships by bodies that have scholarships specifically for business school folks. Usually my advice to people who are considering business school is really the financing bit should be the last piece that you're thinking about. Unless it's like super, super important for you, because almost always the finances work out in terms of how you're going to fund it.
Definitely they do. And then you get to business school. How do you get from that to Wall Street and where did you work at yourself?
So what I did was you get to do an internship between first and second year. Summer internship. And I did my summer internship with the BofA, Bank of America, in equity research. And I was part of the team covering US REITs. So I did that for 3 months. It was during COVID, so I never actually went to New York. A bunch of guys in investment banking actually went to New York because they felt that was important. It wasn't required. So I did that remotely and then got a full-time offer. So how that works is after your internship, if all goes well, you get a full-time offer. So you know you already have a job lined up after graduation.
From my experience, though, in the Nordics, I wasn't so lucky to get a relevant internship, I would say. Maybe a warning for someone who's maybe thinking of doing B school in the Nordics. It's a bit more closed up. It's not like the American system, I would say. Like it's very open in terms of getting international places for internships. So if you're considering coming to the Nordics, more places to look out for internships would be like the UK and perhaps France or Frankfurt, mostly because the Nordics are of a very small business environment. The finance circles are very small. So they tend to hire locals more than foreigners. So it's a disadvantage if you're coming here and seeking like a relevant internship. So more often than not, you need to go out of the country. And then that involves also getting a visa like to the UK, which has gone out of the EU. So a bit more complicated in that regard. That's my 2 cents from here. So you get to Bank of America. Any learnings from there in terms of how Wall Street works? Give us a bit of an inside view from your perspective working at a Wall Street. I think Bank of America is one of the top Wall Street firms. They're affected by 2008 financial crisis, but they really bounced back a lot. And CEO Brian Moynihan, tell us a bit about working under him.
I don't have a reference point in terms of I worked in the local markets professionally and then went to work on Wall Street. So I know how to compare the two. Maybe now, but back then I really didn't have a reference point. But one of the things that really jumped out to me, and it's like continuation of that narrative about the US is, this is my opinion, but like the US is, you could say the US is a nation of foodies, right? And what I mean by that is Americans just want to get the job done. Like where I come from, and even my training, my undergrad, you like bounce ideas around, you kind of debate, you want to figure out, is this the right way of doing things? Like getting the conceptual framework right fast and then getting to actually doing it. With Americans, it's really just get out to work and just get the job done. And for me, it wasn't so new because I'd worked in an international environment previously. But then with Americans, and especially now on Wall Street, you're given the task, you just have to do it. It doesn't matter how you did it, just get the job done. And for me, that was eye-opening because I think that's one of the things that makes American capital markets work. They just know how to get things done. And that was a very phenomenal learning experience because once I got the full-time offer and I started working with a different team, it was really the exact same thing. Really, they had assumed, hey, he had worked with this team. He knows the process. He knows the culture. He knows how things are done. And from the get-go, right from orientation, it's go. And that's really the American culture, right? It's very little time to debrief or to take a breather. A lot of it is like in the process as you're doing it. And that was a cultural shock for me, right? The way Americans do things. It's very pragmatic. It's like getting to the finish line. Doesn't matter how you go to the finish line, you just get to the finish line. And in a way, it's really powerful. And I can see why that's the case. It's because of the clientele. Many of your clients are really some of the biggest institutional investors in the world. And you're competing against other investment banks or other banks who are providing more or less the same service. And the only way to differentiate yourself is really the turnaround and getting things done. Of course, getting things done well, but yeah, the priority is get it done. So that for me was an eye-opener coming from a different culture for sure.
What I can add there from my reflection when I was working at a hedge fund, I think the first internship I got in terms of a summer, the differences in culture reflected itself when I got there. And they just gave me a task I was to do that summer, and they just left me to do it. And they didn't give me like from day-to-day guidance. They expected me to be the one to tell them, I've done this much.
Yeah.
Can you help me? And let's have a meeting and discuss this. So I think that bit of working in an internship in Kenya, where I worked at Safaricom, was like, you want to show the boss you're working. So you'd be staring at the computer, even if you're not working. But then you come to this culture where nobody really cares if you're in the office or not. They just want to get stuff done, and then you have to get the stuff done. So I think that was a weighty responsibility for me. And then working out your summer schedule for yourself and then coming with pointers where you can reflect, okay, this milestone was achieved and this one was achieved. They need help to get this milestone. So I think that was a proper cooking for me.
Awesome.
What do you think about that?
Maybe just to chime in, actually, I can totally relate. Being Kenyans, we're used to following orders from above. It's like your boss said, do XYZ, and you have to do XYZ. In American culture, and I think you observe that quite a lot, it's you also have to show initiative. And there are a lot of people who would like to sit in that seat that you're sitting on as an associate. Talent on Wall Street is a dime a dozen. The moment you leave, someone else is more than willing to fill that seat. Perhaps more intelligent, more talented, more willing to work hard, to go the extra mile. And so it's just assumed that you really want to be there. You want to take advantage of the resources that are available to you in terms of the covering analyst. Like that someone is really a walking library of the sector is covering. So you want to learn as much as possible. But at the end of the day, everyone in that franchise is trying to make the analyst look good. And you have to demonstrate initiative. So you're walking into his office with ideas, you are meeting deadlines, you are exceeding those timelines. You're really showing initiative. And it's assumed that that's how things are done. So for me, it was a bit slow, especially with my internship. Like it took a bit of time to realize, wow, I actually have to really get things done, really approach and be proactive. At the time I was reporting to a director and he was really nice. He was like, hey, this is Wall Street. It's during Corona, so I'll cut you some slack. I know you're not in the office. These are the pointers and I'm really relying on you. And this was funny. This is someone who knows the industry inside out, but he's telling me, hey, I'm really counting on you to watch out for left field, like stuff that's coming in that I'm not focused on. showing initiative, and I can totally relate to the experience. You really have to feel that you're going the extra mile. And they really love that, actually. They really love someone who's showing initiative because their plates are also like really full, right? Like their days are packed. And it really helps that they're not breathing down your neck. Hey, have you done this? Have you done that? You've done it. And you're going the extra mile by saying, hey, I've looked at our coverage and I think maybe we need to change the rating here. Maybe there's this piece of news and this is how it might impact our estimates. How do you want us to go about it? How do you think about it? They really love that because that's part of the culture. Everyone is really pulling their weight. It's a very small team covering a huge, for instance, the finance sector, or maybe asset managers, or maybe insurance. These are small teams that kind of market. So it really helps that everyone is really pulling their weight and doing the best they can to like make the analysts look good.
And then Beto was also taking initiative. Nobody ever tells you that. You just realize, hey, you gotta come forward and say things, take credit for stuff. Because I think a lot of people struggle with that. I did that. I did this. I have done this. And that bit of also being honest in terms of when you mess up, like, hey, I made a mistake. I'm sorry about that. It doesn't come across, especially when you interact with Kenyan workers. I would say I myself suffered from that a lot. I just think, hey, I can do this. I can't do that. And I'm able to do this and stuff like that. Just being forthright because people don't have time to follow. So you need to tell them I can't do that so they can look for someone else to do it for them. Did I get that right?
Yes, totally. I think you really just have to show up for this job and also knowing like you're not doing this for someone else, you're doing it for yourself. And just coming back to my story, I want to be a good investor. So when I learned a trick to thriving in that space, I was like, this is not something I'm doing for him, for my director or my MD. It's something I'm doing for myself, like really learning what can I do to differentiate myself as an analyst or as an associate.
I think that's very important. Any other reflections in terms of working on Wall Street and perhaps how that differs from Kenyan culture? You've been back a bit, so you have reflected a bit on now on how that differs from here and what you struggle with here. Our markets are pretty inefficient. So you shared a bit of your frustrations. So perhaps you can reflect a bit about how US markets operate and what you can learn from that as Kenyan investors, and especially if the regulators are listening on how to make markets a bit more efficient.
I think right out of the gate, information, like data, availability of data. If you're a retail investor in the US, you have a ton of information. You have too much information. You're overwhelmed with information. And I think that's by design in terms of like accessibility to information. And I think that's something that might be improved upon in terms of making important information available to investors. If they want to know something, remember, investors are outsiders. They're not managers. They don't have access to the ledgers. They don't have access to the sales teams. So they don't know how sales are like, how ICS, the internal control system, is like. They're really just looking at the business from outside. And what really helps investors is having as much information to make an investing decision as much as possible. So I think that's the one biggest thing that could really improve capital markets in this part of the world. Just making sure that you have the right type of information and that's structured. And it makes it really easy to analyze it, to access it, and eventually make investing decision based on that information. So that's like really the one big thing that I think could really be helpful for investors who are investing in this capital markets.
I should say our founding of Wango Capital was born out of that frustration of being unable to access data on time. Just a simple access to data is really hard. We battled with the NSC and CMA just to get an investor calendar going. And that's just list all possible things that can happen during a year so that an investor can plan themselves out. If CMA or NSC was listening to you, what are some of these bottlenecks that you've observed that we can easily pick up, easy pickings that can make our markets a bit better in terms of just an investor calendar itself, as you've seen, was a battle to get that done. So perhaps what are some of the things that you learned there that people can learn here as well?
I think really the big one is the data. And kudos to you for really fighting that battle and helping investors with that win. I think the other one is really just the responsiveness of regulators. If there's one thing I also realized about the American capital markets is everyone works together. So you have the intermediaries, you have the investors, you have the regulators, you have the buy-side folks. Everyone really works together. They're in sync. And the one key objective is functional capital markets. I'm not a policy expert, so I might not have concrete ideas that regulators here could look into, but just being open to hearing investors, knowing their pain points and knowing how to improve the system. The process should be investor-led. If investors feel that they are not getting as much information as they'd like to have, what sort of information are they looking for? Like, how do they want it? Is it something practical? Like just having dialogue. I think having dialogue with investors, with as many stakeholders as possible within the capital market space and really being responsive. I think that would be a huge win for our industry. Like everyone working in together and being in sync and like reading from the same script. I think that for sure is, in addition to the data, I think the data is like the easiest pickings. Like you notice that when you go to some of these websites, when you look at the format, if you'd need 2 or 3 interns to get data to a format that you want. And if you're an analyst, that's not a lot of value add in that analysis value chain. If you're spending too much time just getting the data, that's not a very good thing.
The data itself, it's a bit of a challenge. I guess that can help us a lot. But then you got tired of Wall Street yourself and came back to Kenya. There's something interesting about that. Did you make enough money, become a billionaire?
I wish. That's a very good prayer. That's a very good prayer. The reason I went into capital markets and like business school, capital markets, like Wall Street, was always to get a skill set that I could use back home, back here. So for me, the end goal, and I think I really love that about the process, that I was very clear about the outcome. And what you notice about Wall Street is it's a very steep learning curve. Right? Like you're learning a lot at the analysts or associate level. And then it kind of tapers off as you're getting into VP, director, MD levels. And the game also changes. It's no longer about subject matter expertise. It's about managing relationships. So if you're someone who wants to have a long-term career on Wall Street, that's definitely what you want to do. You want to stick around for the long haul because the first few years, you pick up the skills that you need to really unpack your sector. You can speak fluently to what drives the names under your coverage. But then the senior you get, the less important that becomes and the more important managing relationships becomes. You're now running a franchise. You are the business. You're running your business and your name is out there, right? This guy is our guy for this sector. If we want to know something about the sector, if we see something on Bloomberg, we'll just pick up the phone, call them, tell us, hey, what do you think? What should we do? So it's about managing relationships. And the other thing is there's so much talent on Wall Street. Everyone wants to work on Wall Street. So it's this huge magnet of talent. There's also a glut of capital. There's a lot of capital chasing not so many opportunities. The US capital market is about 60, maybe 70% of global capital markets. The population is maybe under 10%. And you flip that, and Africa is maybe 2% of global capital markets value. The population is probably 20, 25%. It's the second biggest. Asia, I think, would be first. And it's growing fast. And it has a very young population. So as a capital market expert, you're not really adding a ton of value to society in a place like Wall Street, where everyone is like super, super talented and they're doing a lot and there's a ton of capital, as opposed to like being in a place like this region where there's a huge potential. There's a very long runway in terms of growth. You want to be there. You want to be in a place where you're going to make a lot of impact. So that was part of my process. That was part of how I was thinking about it. I really love working there and learning from all. I think my class, the 2022 class of associates, during orientation week, you meet PhD graduates, you meet really super accomplished folks that you learn a lot from. And I love such kind of environments. Like it's very intellectually stimulating. I love to be in places like those where you're continually learning something new. And I would have loved to continue there, but I also felt that maybe I would not add as much value there as I would be adding in a place like this. So I think that was really the main one. I was eventually going to come back. I think maybe it happened sooner than I wanted for a personal reason, but just short of a few months. So I was always going to come back and try and figure out, do I have a spot in this space where I can kind of niche and do something interesting that the market values?
I have a friend who also was in the US and came back. And whenever I tell him about coming back to Kenya, he tells me he would slap me if I came back because he thinks in terms of opportunity out there is better than back home. So perhaps as he listens today, I hope he understands that Kenya also has opportunities, right?
100%. I think it's relative. If you want to be in a place like Wall Street and you love it there, why not? And you're there. So why would you come back? But if your journey is different and you're thinking about your career differently and you're thinking about the space differently, and one of the beauty of being an analyst is that you can have a contrarian view. Someone might say, hey, I'm doing very well here. This is maybe your personal balance sheet you're looking at, not like a sector thing. I'm doing very well here. I don't think I could do as well back home. Why would you come back? I think for me, that was different. I'm looking at it maybe differently. I have a contrarian view, I guess. And I've noticed like when you say, hey, I came back and I'm doing this, maybe that's not consensus views, about how the region is doing. But if you really think about it, if you really think about the population, if you really think about what we're doing and the potential runway and being useful, being impactful, you probably want to be here. You probably want to be here rather than Wall Street. In Wall Street, yeah, you're doing well, but you're one of like 10,000 associate, like we call them associate or like model monkeys. The moment one leaves, there's someone else who's dying to sit there and learn as much as you have and make as much impact as they can. You're fairly replaceable. They have a ton of capital. They have a ton of resources, a ton of talent. And so you're not making as much impact there as probably you would here. And what I like is you're also seeing a shift a bit, even in the perception. Like there's been a trickle of professionals coming back and they're sizing the opportunities differently. And I like that. You want what you call like a critical mass of folks doing something and unlocking opportunities in the economy. So for sure, it's a very personal decision eventually.
Definitely. So in terms of coming back now, what are you doing around? What's your areas of interest? I know you're also interested in getting back into the business landscape itself in terms of leadership opportunities. Where's your heart currently?
Capital markets, still, let's see. I was covering banks in the US, North American banks. You learn a lot about the sector, how it works, but those are different rate cycles. And you might think that knowledge is transferable. To a large extent, it is. Like whatever learnings you picked up there are very transferable. You can use them for this sector. But I also very quickly realized there's a lot about the Kenyan space that I don't know. So this past year, I've been really trying to tap into professional circles locally, just trying to get in front of as many subject matter experts as I can to learn from them, learn how they think about the sector, learn about how they think about capital markets generally. So really just taking a learning position and soaking in as much knowledge as I can, because you realize, yes, I know something about banks, but I don't know a ton about local banks. But I've been trying to improve my process. Like I'm also investing, I'm also risking capital. But initially for me, it has been, hey, you really just want to learn as much as possible from as many people as you can. And that's more or less what I've been doing. I've also been dabbling in like entrepreneurship. I think I've been doing things that my mom was doing. So my mom loved trying out new businesses and I'm doing the same. And it's so much fun. I probably should have done this much earlier. Thinking about a business and also the knowledge you pick up from business school is, yes, this is how I should think about the markets. This is how I think about the go-to market strategy, communicating about the product, finding a niche and that sort of thing. I've also been trying to dabble in business as well. And I'm consulting on the side just a bit. I'm consulting with an NGO for now that's working in getting a business ready for investment. So that's also like super fascinating. I think talking to these NGOs and seeing what they're trying to do, I think the narrative has changed. It's not about giving grants. It's about how can we improve private markets. And I like that. Even if it's from a government organization, I think what they're doing is really fascinating. And I'm super invested in that gig. But a bunch of things, but mainly capital markets for sure.
You're also on the lookout for opportunities. So perhaps you can also pitch yourself a bit in terms of that aspect. I've looked at your modeling in terms of local banks and all. You can give us a quick 101 guide in analyzing banks ahead of banks earning season next month. Have your model at the model really perfect. I hope one day you can be able to sell it around and see.
Thank you. I wish I could monetize it. So when you think about banks, you want to think about the bank analysis starts with a balance sheet. Banks make money using money. So that money is sitting in the balance sheet. So you want to unpack how are they using that money and how are they getting it? And the two big buckets, how they're using that money is they're lending it out. So they have the loan book. Where are they getting that money? From deposits. So those are the two big pieces when you're looking at banks. Everything else is secondary to that. You want to really look at how they're deploying their assets. So the loan book, a bit of that is also, a bit of the deposits is also packed in securities, the securities book. And when you're looking at deposits, you want to find out how cheap or expensive are these deposits? Because this money that's sitting in the balance sheet, the assets and the liabilities, it's reflected on the income statement as net interest income. You have the net interest income, you have the interest income, and then you have the interest expense. So the bigger the margin, the better for the bank. So you want to figure out, when you go back to the balance sheet, you want to figure out, okay, these deposits, where are they getting them from? Are they cheap deposits? Are they checking deposits? Are these like deposits that they are getting from more expensive sources? And then once you have a good sense of the expense, go back to the assets. How are they deploying these assets? What type of loans? Because different types of loans have different riskiness. And risky loans, more income in terms of how much they're charging. But at the same time, there's also the risk that you also have more defaults. So you also want to look at what's the non-performing losses there. In terms of securities, it's the same thing. How are they deploying those securities? How much are they earning? Are these like long-term securities? So maybe the weighted average duration there. The longer it is, probably the better it is for them because they're earning more, because they're probably packing them in long-dated securities. But at the same time, that also comes with risks. So it's once you figure out the balance sheet structure, you figure out the bank itself. Something else is maybe you want to figure out the sensitivity. Is it an asset sensitive bank or is it a liability sensitive bank? And what I mean by that is when rates change, what moves most? Is it the asset side or is it the liability side? And that kind of helps you when you're looking at the monetary policy. Like when you want to have a view of how monetary policy is going to change, that will impact the balance sheet in a certain way. And that certain way is determined by the direction of sensitivity. Those are like the big moving pieces for banks. And I guess fiscal policy also plays a part because governments are issuing securities. You want to have a view of, are they issuing a ton? What does that mean for rates? What does that mean for monetary policy? How are the two linked? And eventually rolling all that back up to what that means for the balance sheet. If banks are not issuing a ton of loans, are they packing a lot of the deposits they are receiving into securities? What rates are they getting for securities? And are you likely to see governments issuing more securities? So you want to have a view, or you also want to really understand what's happening in the fiscal policy side of things. But mainly it's really the monetary policy. Like rates really determine the anchor. The policy rates really anchor bank performance. So you figure those pieces out, you understand how monetary policy works, and you figure out how to approach the analysis of a bank.
That's a good guide to banking and investing. So two questions. One is what makes a good analyst from your perspective at Wall Street? And then secondly, given AI, one thing I've been reflecting on the past 2-3 months is using AI and LLMs to do all this financial research and analysis. I should say the best tool out there to do financial research and analysis using AI is actually Grok 3. It's amazing in terms of how much data it can crunch. But LLMs are also not very good with numbers. So you need to double check. But given all these, there's a lot of worries in the markets. Will analysts, all of them be replaced? What does the future look like? So first start with what makes a good analyst and look at the future of analysis as a whole, and then give us your perspective on those.
Thank you for the tip. I was just trying to note down that Grok 3 for future reference.
Don't try. ChatGPT is not very good with financial analysis. All models have their own niche. That's what I've thought of so far.
Awesome. Thanks for the plug. I remember there's this one time we attended an annual conference. It was normally held in Boston. So it was like a conference for analysts. And they usually bring this bank executives in and then they quiz them about the strategy, about what they're thinking about policy rates and whatnot. And there's this really good analyst, fairly famous. So we had these questions about capital, about interest rates. We also had at the time potential rules that would be coming in place and what the potential impact would be for banks. So a lot of our questions, most analysts, were around capital. Well, that's a huge topic for banks. But there's this one analyst who kept asking questions about AI. What are you doing with AI? How do you think it's going to impact your expenses and stuff? He had so many leading follow-up questions on AI. And I was puzzled, like why all of us are concerned about capital, but this guy is like really keen on AI, a topic that most of us found a bit niche and maybe somewhat random. But I'm bringing this story up because that kind of highlights what a good analyst does. He pursues information off the beaten path. It's very easy to ask questions around capital, leverage, and that sort of thing. And then the following morning, all of you are going to produce research on exactly the same topic. So if I'm a hedge fund manager, and I have in my inbox 10 different reports on a conference that was held yesterday, and everyone is talking about capital, you're not interesting. But then if I see in my inbox someone who has insights on what banks are doing about AI, I'm immediately interested. I want to know what exactly are they doing? What's the potential for this for banks? Are they like zapping up fintechs and that sort of thing? So you want to stand out, and the way to stand out is to really try and look and figure out, are there other sources of information that you could pursue and add value to your process and add value to your clients. So try and look at sources of information that no one else is trying to look at. The other thing is, and I think this is more relevant from a career development perspective, is we work with data a lot, from data extraction, collection, wrangling, analysis. And the part that you want to spend the least time on is the data gathering. But that's why we really have the analysts and the interns doing it. Because if you're the covering analyst, if you're the one facing clients, you're talking to them about the insights you've gathered from your data collection analysis bit. So you want to spend as much time analyzing data and not extracting or gathering data. So that's 101. You want to spend more time looking at data rather than trying to find and organize data. And one thing that I'm finding rather late in my career, but I wish I knew earlier, was the value of coding, like VBA, a bit of Python, ways that automate your data gathering and wrangling process. I think that's really useful. And it's becoming increasingly useful. Like when you look at some of these profiles of the folks, hedge funds and boutiques and bulge brackets are hiring, you'll increasingly find that aspect, someone who knows how to work with VBA or Python or R or whatever. That makes you a good analyst. You're not spending a ton of time looking for data. You're spending a ton of time trying to figure out what that data means. The other thing, I think that one, and I noticed this, I think that was also a huge wake up revelation. When you're not a professional investor, every piece of information is important for you. You see this news article about this company, you want to read the whole thing. You want to know, hey, what are they saying? What does that mean? You see this other piece of information and you spend so much time on very random things. But the thing is, you want to spend as much time on the key thing, the key driving factor for your sector, the key driving factor for the name you're covering, the key factor for the names that you care about. And it's especially important for someone who is looking at a ton of information. If you don't have that process, you don't have that approach, you're going to be easily overwhelmed. Where do you start? But if for banks, the key thing that matters is interest rates and monetary policy and how that impacts bank performance and EPS. So you want to figure out where do you have the EPS impact. That really helps you sift out the noise from the signal. And it really helps you. You're not going to be spending hours looking at Financial Times, Wall Street, whatever. You're really focused on the key driver for your sector. And that makes you stand out automatically. Because unfortunately, that is not as common as you'd expect. You find people like analysts spending too much time publishing and writing on stuff that does not have EPS impact. At the end of the day, you want to say, hey, this has changed. This is the impact on my focus, on my estimates. And this is what it means for valuation. If it's not information that's helping you get changing your view on estimates, then it's probably not important information.
It's narrowing down to what matters and knowing how to leverage that at the end of the day. But I think also like the art of distilling like complex information into simple bits that people can understand very quickly and grasp. That's been from the very beginning, at least our kind of ethos at Mwango Capital. So we try to make sure that the complex financial information, you just distill it into 2 or 3 points someone needs to know at the end of the day, at the beginning of the day. So I think it's been a key aspect of our growth. And then also it's something that I've learned that is very useful. So like you go through an entire report and quickly summarize in a short version, like what someone needs to know about that report. They find it really helpful as an analyst at the end of the day. You're a very interesting person, I would say, very down to earth. My engagements with you have been really useful. So I thought I would bring you to a Spaces and then you'd be able to share bits. I shouldn't say this is your first time on Spaces. You actually created this Twitter account specifically just to be on these Twitter Spaces. And you're kind enough to at least give us a bit of time. In terms of maybe someone is listening in the audience, wants to get in touch with you, how can they do that? What are some of your closing thoughts and tips? So over to you to pitch yourself, to tell people where they can find you and some closing thoughts.
Thank you. And just to mention, I've learned a lot from you as well. And I find what you're doing very inspiring. It goes both ways. I'm really learning from you and what you're doing in this space. It's very innovative. If someone wants to reach out, is thinking of business school, I'm more than happy to chat, hear your thoughts. If you want to talk about capital markets, I'd love to chat as well. I love talking about capital markets. I love talking about stocks. I'm primarily a stock picker. I don't really focus on the macro. I'm a stock picker. Always happy to chat about investments and stocks you're thinking about. I'm also slowly getting into consulting. If you're in that space, I'm trying to learn as well. It's like my first time getting into consulting. It's really fun talking to clients. Reach out, let's have a chat. But thank you so much for hosting me. I'm really grateful for this.
Thanks, David. I should say Mwango Capital is a side gig. I'm more of something I do for the good of the markets, mostly. We have a good team behind it. But my main gig is actually working with the US capital markets. So if you've not checked it out, I do check out the transcript.substack.com. A couple of years ago, I cold emailed someone who was writing something similar. I told him I wanted to work with him, and then we worked, and it's been 10 years since of working on that product. We read earnings calls, transcripts of companies, and get to tell investors on the key aspects of it. So we are on the Substack mostly. That's where we generate most of our revenue. So David, do check it out. The rest of the people in the audience, do check it out. I thought I should pitch myself because I rarely do that. My name is Eric Mokaya. I'm the founder of Mwango Capital. I'm really appreciative of David to have taken the time. If you want to reach out to David, just DM him. I think now he's available on Twitter, so you can reach out. David, anything to add before I close?
Nothing to add. Really appreciate the opportunity. I'm very grateful for the time. Thank you very much for the opportunity, Eric.